If you're a long-term investor or a family man with money invested in Apple, Nvidia, or other US stocks, you need to know this. Warren Buffett, the legendary stock trader, just sold nearly half his stake in Apple.
Given what you mentioned, there was some news that came out in the 10Q this morning. It shows that Berkshire sold another 115 million shares of Apple in this last quarter. That's Berkshire's largest holding.
Notice how Buffett stutters when asked if his views on Apple's economic or investment attractiveness have changed since Berkshire first invested in 2016.
No, I would, but we have sold shares.
So what does this mean for you as an investor holding Apple, Nvidia, or other US stocks?
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
Today we'll review Buffett's big signal, Apple's future, the job quit rate, and the chip war between US and China. Buffett claims he doesn't time the market, but historically when he sells this much, trouble usually follows.
No attempt made to predict markets. We have no attempt made to pick stocks.
Here's an example of a market environment that eerily resembles today's. 1965. The US experienced strong growth, but inflationary pressures began to build due to increased government spending related to the Vietnam War. 1966. The Federal Reserve started tightening monetary policy to combat rising inflation, leading to higher interest rates. 1967. Speculative excess growth with many stocks trading at inflated prices. July 1969. Buffett announced the dissolution of the Buffett partnership, citing concerns about the speculative market environment and scarce value investing opportunities. By December 1969, the US officially entered a recession due to high inflation, rising interest rates, and speculative excess. There were other examples like the 2000 Dotcom bubble, where new tech stocks surged and the Nasdaq rose rapidly. Companies spent heavily on marketing to establish their brands.
Amazon.com has all the toys a kid could need, like a Star Wars yo-yo and magnetic whale art.
But Buffett stayed clear of new tech, recognizing the red flags.
I can't imagine you not understanding something.
Oh, we understand the product, we understand what it does for people, we just don't know the economics of it 10 years from now.
Then tragically, the dot-com bubble burst and the Nasdaq lost more than half of its peak value. In our last example, Buffett's investment in Freddie Mac and Fannie Mae, where he became the largest shareholder after investing since 1988. Charlie Munger even said, "I can't think of a more tangible compliment to the stock than to buy every damn share we are allowed to." And we all know what followed this. Later in testimony to the US Financial Crisis Inquiry Commission in May 2010, Buffett revealed concerns about the government-sponsored loaning business, particularly its management, and hit the sell button for a majority of his shares in the year 2000.
Sensitivities and judgment, even of people who are very smart. I mean, initially, my old boss, Ben Graham, used to say you get much more trouble in investments.
For the long-term investors and family men, you need to understand why Buffett sells stocks. Let's look at Apple. Buffett states it's because the tax rate is the lowest it's been in a while.
We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate on the gains we're taking in Apple. That rate was 35% not that long ago, and it's been 52% in the past.
He also predicted the government spending will continue and higher taxes are likely coming to tackle deficits. But selling Apple cost him $15 billion in taxes, more than Coca-Cola makes a year. In reality, it comes down to two simple reasons. US stocks, including Apple, are too expensive. Second, Apple's sales have dropped significantly in its largest market.
At the same time, when you look at Apple, the stock was getting very expensive, right? Last time I checked, it was trading 27 times forward earnings, and it rallied almost 50% in 2023.
Sales in the Chinese market, a key area for Apple, plummeted by 6%, and operating income decreased by 10%. Apple lost its top 5 positions in China, while brands like Huawei and Xiaomi performed well. We predicted this 6 months ago in our community and also analyzed Huawei in detail. When Buffett sells Bank of America and half his Apple stocks and holds more treasury bills than the Federal Reserve, it signals that he doesn't see US stocks as cheap for the long term. Consider the job quit rate. It measures the percentage of workers quitting their job, a sensitive indicator of the job market. If you can't quit your job, it suggests the economy isn't doing well. The job quit rate is as low as 2018. Travel hospitality are soft, with softness being the buzzword across the sectors. We've seen Airbnb stock drop like a rock, airline travel stocks drop 25% on the year, and other stores like CVS and Five Below stock are doing poorly. This indicates US consumers are running out of cash and savings. Moving on to the chip war between the US and China. The US AI tech giant Nvidia might soon fall behind, bringing down other companies with them. Microsoft and Meta have placed billions in orders for new Nvidia GPUs, which are now delayed. On top of this, Nvidia claims their new Blackwell GPUs can reach 3 nanometers, but that might not be the case. Taiwan Semiconductor Manufacturing Company, TSMC for short, the manufacturer of Nvidia's GPU, said they cannot produce it as designed. So in reality, Intel, Apple's, and Nvidia chips are at best 7 nanometers and not 3. So what happens to the stock market when the AI giant Nvidia, who arguably started the AI movement in recent bull run, falls behind on chip making? Want to stay up to date on the US and Chinese stock markets, including Huawei and other Chinese chip companies? Join the P and Friends trading community, link in bio, or follow here for updates. Thanks for watching.